Bitcoin overtakes silver, a digital coronation in the investment arena. In a historic move that marks a pivotal moment for both traditional and digital assets, Bitcoin has surpassed silver to claim the title of the second-largest exchange-traded fund, ETF, commodity in the United States. This ascension, achieved in a remarkably short time frame, since the debut of Bitcoin ETFs in October 2023, signifies a tectonic shift in the investment landscape, where the digital gold is increasingly captivating investor interest and challenging the established order of precious metals. This article delves into the intricate tapestry of factors weaving this narrative, dissecting the implications of Bitcoin's ascendancy for investors, the evolution of asset allocation strategies, and the potential future trajectory of the digital asset revolution. From speculative novelty to institutional darling. Bitcoin's journey from a shadowy internet novelty to a legitimate asset class, with mainstream acceptance, has been fraught with volatility and skepticism. Initial concerns surrounding its decentralized nature, lack of intrinsic value, and potential for nefarious activities cast a long shadow over its perceived legitimacy. However, Bitcoin persevered, its inherent transparency and tamper-proof nature gradually attracting an initial niche following, primarily comprised of tech enthusiasts and early adopters. The turning point arrived with the institutional embrace of Bitcoin in 2021. Forward-thinking financial institutions, hedge funds, and even legacy corporations began allocating portions of their portfolios to Bitcoin, recognizing its potential as a store of value in an environment plagued by inflation and geopolitical uncertainties. This influx of institutional capital served as a potent catalyst, propelling Bitcoin's ascent and legitimizing its presence within the wider financial ecosystem. The ETF factor, bridging the gap for mainstream investors. The introduction of Bitcoin ETFs in October 2023 further accelerated its mainstream adoption. These instruments provide investors with exposure to Bitcoin's price movements, without the complexities of navigating cryptocurrency exchanges, or security concerns associated with self-custody. Their regulated nature and accessibility through traditional brokerage accounts ease the entry barrier for mainstream investors, who could now incorporate Bitcoin into their portfolios within familiar frameworks. The result was a surge in investment inflows into Bitcoin ETFs. Assets under management, AUM, for these instruments skyrocketed, propelling Bitcoin to surpass silver within the ETF commodity space in mere months. This rapid ascent highlights the immense pent-up demand for regulated Bitcoin exposure and underscores the appeal of the digital gold narrative, especially in an environment with traditional assets seemingly faltering. A paradigm shift in asset allocation. Bitcoin's ascent to the second spot in the ETF commodity arena compels a re-evaluation of traditional asset allocation strategies. The rigid adherence to the 60/40 stocks or bonds model appears increasingly outdated in the face of unprecedented economic and geopolitical headwinds. The persistent threat of inflation, coupled with volatile equity markets, has eroded the efficacy of this long-standing paradigm. In this context, Bitcoin's unique proposition as a non-correlated asset with limited supply and decentralized nature shines. Unlike traditional assets, its price movements are driven by distinct factors, offering diversification benefits and potential protection against inflationary pressures. While its volatility remains a concern, the growing institutional consensus on its long-term potential has compelled many investors to consider allocating a small percentage of their portfolios to Bitcoin, thereby enhancing the effectiveness of their risk-adjusted returns. The road ahead, challenges and opportunities. Despite its meteoric rise, Bitcoin's journey towards establishing itself as a truly dominant asset class remains paved with challenges. Regulatory uncertainties, concerns over energy consumption, and potential systemic risks associated with its underlying technology are some of the hurdles that need to be navigated. Additionally, the nascent regulatory landscape surrounding ETFs and digital assets in general requires further clarity and standardization to instill unwavering investor confidence. However, amidst these challenges lie an abundance of opportunities. The ongoing development of Layer 2 scaling solutions promises to address the network's scalability issues, facilitating faster and more affordable transactions. Increased institutional collaboration is fostering the creation of robust market infrastructure and custodianship solutions, mitigating security concerns and enhancing accessibility. As these critical advancements take root, Bitcoin's long-term narrative as a valuable hedge, an alternative asset class, will solidify, attracting further investment and propelling its price discovery process. The digital coronation, a prelude to a broader transformation. Bitcoin's ascent to the second spot in the ETF commodity arena is not merely a symbolic victory. It signifies a fundamental shift in investor preferences, highlighting the growing appeal of digital assets and their potential to disrupt established financial structures. While Bitcoin serves as the current torchbearer, the broader ecosystem of blockchain-based assets encompassing tokenized securities, fractional ownership of real-world assets, and decentralized finance protocols are poised to revolutionize various facets of the financial landscape. The coming years are likely to witness a continued proliferation of innovative digital asset solutions, potentially challenging the dominance of traditional intermediaries and fostering a more inclusive and interconnected financial ecosystem. Regulatory frameworks will need to adapt to this digital evolution, embracing innovation while upholding investor protection and financial stability. The key areas of transformation. 1. Asset tokenization. Traditional assets like real estate, art, and intellectual property can be fractionalized and represented on the blockchain, facilitating easier ownership, democratizing access to investment opportunities, and enhancing liquidity. 2. Decentralized finance. DeFi peer-to-peer financial services like lending, borrowing, and trading can be conducted without the need for intermediaries, empowering individuals and reducing reliance on centralized institutions. 3. Central bank digital currencies. CBDCs. Governments and central banks are exploring the issuance of their own digital currencies, potentially revolutionizing monetary policy and international payments. Challenges and opportunities. The road towards a fully digitalized financial system is paved with challenges. Regulatory uncertainty, technological vulnerabilities, and potential systemic risks associated with decentralized systems need to be addressed. However, the potential benefits of increased accessibility, efficiency, and transparency are undeniable. Collaboration and innovation. Building a future-proof financial ecosystem requires collaboration between traditional institutions and the burgeoning digital asset space. Embracing innovation while mitigating risks through robust regulatory frameworks and industry best practices is crucial. Fostering a culture of open dialogue and knowledge sharing will be essential to bridging the gap between the old and the new. The final frontier. Bitcoin's ascendancy over silver is not the end of the story. It is merely the opening salvo in a broader narrative of digital transformation, reshaping the financial landscape. The coming years will witness a profound shift in how we think about, manage, and access financial resources. The future of finance will be decentralized, inclusive, and driven by innovation. And at the heart of it all, the digital coronation of Bitcoin may well stand as a pivotal moment in the annals of financial history. Conclusion. Leo. The rise of Bitcoin and the broader digital asset ecosystem presents a once-in-a-generation opportunity to redefine the financial landscape. By embracing innovation while addressing challenges with foresight and collaboration, we can usher in a new era of financial inclusivity, transparency, and empowerment. The digital coronation is not just about Bitcoin, it's about paving the way for a brighter, more equitable financial future for all.